Hi everyone, welcome to the Rage Money Community YouTube channel. I'm your host, William Zhang, and today we're going to talk about a potential Black Swan event that I see in the next couple months that could really be the trigger of the popping of the stock market bubble. So the assumptions we need to make right now is that are we in a bubble? And to ensure, I think that we are in a bubble. And because we have this influx of cash and liquidity started by the Federal Reserve, causing people to have confidence and believe in that the stock prices will keep on going up until there's a change in the Fed policy. That's why this past couple weeks there were a little nervousness in the market of people buying hedges in the S&P 500 in their tech stock, and some people are taking profit because one of the Federal Reserve members stepped out and said they're looking into tapering in their economic programs, in their QE, quantitative easing programs, starting maybe sometime in October and a November, December time, where you will stop buying mortgage-backed securities using Federal Reserve money. So that's like one way to decrease liquidity in the market, and that causes investors to lose confidence in the stock market and they start taking profit or take an opposite position. But the Black Swan event that I am looking at might be the greatest or the biggest in modern United States economic history. So, and it's gonna have something to do with the debt ceiling crisis of 2021. That I'm gonna coin it right now today, and this will be potentially a Black Swan event that triggered the downturn in the stock market. So why is this an important event to be looking into and be studying and be following? Is that ever since 1970s, where the U.S. got rid of the rule where you have to have every single United States dollar to be pegged to the gold standard. They got rid of the gold standard, meaning that now you have a central bank that can really just print as much of United States dollars as you wish, and you just have to believe in the United States government to make you full if there's any sort of downturn in the United States dollar. I mean, that's why the modern economic investing principles all involve using the risk-free rate, which is the United States Treasury bonds. So the United States issued bonds, and which is basically debt, to fund government activities. Things like the CARES Act during the COVID crisis, where you have every American's getting $1,200 check and every American getting $600 checks. You got you got United States government helping out the airlines, helping out the small businesses. All those money comes from somewhere, and in this case, it comes from the United States government issuing debt and helping the United States businesses and United States citizens. So how does United States pay back their debt? Usually they issue more debt, and by issuing more debts, they can pay the interest back and they can pay the principals back. So right now we're basically issuing debt today to pay back debt that we borrowed about 20 years ago or 10 years ago or 30 years ago, depending on the type of debt that we're paying back. So why is this a crisis today is that the debt ceiling has been reached after the 2019 debt ceiling agreement, that we basically suspended debt ceiling so government can spend as much as they want until 2021, July 31st, 2021. And guess what? Now we're in September time. So meaning that we already reached our debt ceiling that the government agreed upon back in 2019, which is around, I think, $27 trillion or $28.7 trillion ish. That's the debt ceiling. That's the maximum the United States government can borrow and issue debt and borrow. in the market. So now we're in a what they call extreme measure. So the Treasury, Secretary of Treasury Janet Yellen, basically just using different methods to find ways to gather cash and issue and pay back the interest payments and pay back the principal payments, and then the belief is that this should last us enough until around early November, late October time. But the worst case scenario might be like early October that will be running out of money if we don't have any new way to issue debt in order to fund those payments. So the United States Treasury is considered the best of the best across the globe, meaning that every single modern investment theories uses the risk-free rate, basically indicating it's the United States Treasury bond. And never in the history of the United States have we missed a bond payment, because that's basically what it is. We always make it work. We always find a way to resolve the debt ceiling crisis. Back in 2011, Obama administration. Back in 2013, Obama administration. But this time, we're looking in a different economic environment and a different political environment. We have an environment where we have Democrats taking control of the House. We have Democrats taking control of the Senate. Well, basically taking control of the Senate. And we have a Democratic president. So the Republicans, in this case, they are at the weaker hand. They have basically no leveraging power. The only way they can sabotage or they can play their cards and attack the other party is whatever way possible. They will find whatever way possible in order to sabotage their political opponents' credibilities and in order to gain political power and political chips, so they can win and perhaps flip the House or flip the Senate in the next in the midterm coming up in, I think, 2023, in a couple years. And even if that means that would jeopardize what is the most important thing in the United States economic system, which is the credibility of the United States bond. So maybe in the first time ever that we'll see a missed bond payment or even a default on the United States bond payment, interest payment. And this is why I call it a Black Swan event, because nobody really sees it coming. Well, even there's some talks around in the media, people are writing articles about it, but it's not really a mainstream conversation topic yet. And that's why I think right now is really a good time to start building potentially a position to anticipate an event like that happening, where the United States misses the bond payment for the first time ever, causing a panic in the Treasury market. Therefore, they are selling their bonds. People are getting rid of their bonds because they don't think the United States will make good on their promises to repay the debt, and therefore raising the bond yield. So therefore, basically causing the United States to have to raise interest rate in order to attract more people to buy bonds, and therefore causing a panic in the market, and we can see a sell-off that just like never seen before. And this is why I am anticipating and building up my portfolio with SPY puts expiring around mid-September, expiring around mid-October, and I'm looking to build up more positions ending January of 2022. The why I'm choosing the dates because people can drag things out a lot. Like they might issue a temporary increase in debt ceiling or or like a very, very small increase in debt ceiling just so they can make that October payment, or just so they can make that November payment. But eventually, I just think that in the political environment that we're in right now, where Republicans are in the disadvantage, and they will really find a way to attack Democrats. And in this case, they will just never vote in for any agreements on suspension of the debt payment. And we can really see that United States miss maybe debt payments in November, December, January, or even February time, it will cause a lot of panic in the market and a lot of uncertainty. We'll definitely see a credit. We could potentially, well, if that happens, we'll definitely see a credit decrease from the Moody and the S&P, downgrading in the United States from a triple A to maybe like double A, or um, even lower rating, depending on how long this political fiesta um, plays out. So I'm definitely looking into that area, and I'm very much. This is very exciting time in terms of potentially what could cause the bubble bursting, and and there are some other factors to consider. One is the margin debt. We're seeing record high margin debt, and even though we see a little downturn in the July number, I'm still waiting to see the August number and see what the margin debt level is. If we that meaning that people are borrowing in order to invest in the stock market. So you have a lot of prices. You can see the S&P 500 level really just making record highs week over week, month over month, right? And that's a lot of it is propped up by margins, and that's how you really get a lot of excess return during a bull market, right? From the hedge funds and other institutional investors. But the hard thing is once they start deleveraging, and meaning that once there's a decent size enough sell off, you will be followed by an even bigger sell off, because so much of it is on margin, and once they start selling, you get margin call, and then they couldn't put a collateral to maintain their long positions. They had to liquidate, and then therefore causing liquidations of other institutions. So right now, this is basically intro and a thesis that I'm looking into that I am invested in, and I am definitely going to make another video explaining more about some of the instruments I'm looking into and some of the plays I am doing, and the bet sizing that I am choosing in order to potentially hit a home run during this Black Swan event. So please like and follow, leave a comment below. If you have any questions, let me know, and I'll try to answer them in my next video. Thank you very much.